Okay, my friends, let's get straight into it. This is a workshop obviously about traders. It's aimed specifically for new traders, okay? So I'm going to make the assumption that the people who are going to watch this are new to trading. They see all the cool cats with the lingo, think they know what they're talking about, and they want a little bit of the inside action, but they just don't know where to start. Let's be frank. Sometimes it's because of the way trading is, it's quite there's a lot to learn, and oftentimes it's not how you learn, it's the roadmap for which you learn. So for those that don't know me, you know I'm part of the MDB team, and coming up in June in 2023 we have the amazing launch of Foxify. Now Foxify, for those that don't know, is going to be a platform which you trade. You trade against, it's peer-to-peer, so you trade against other players, and you need to have a little bit of knowledge about trading, let's just say. So we're just going to have a quick run over of Foxify before we dive into the trading platform of TradingView. Just as a little bit of housekeeping, I'm going to be able to take any questions live direct in YouTube, so if there's anything you want to ask, please feel free. If you don't want to ask in YouTube, a good friend of mine, Kick, is also an MDB holder, will be in the AMA questions in the MDB server. Tons of links in the description, so if anyone who's watching this wants to join the MDB, wants to find out more about Foxify or Apex Trades or anything like that, there's a ton of links in the description. But without further ado, let us get on with it. Thank you, so kind. You're so kind. Thanks. Anyway, right, so Foxify. Look, it's P2P, so this isn't central exchange. This is me trading against you. I'm betting on the outcome of a specific price, okay? So what's really cool about this is it doesn't matter what token it is. It can actually be any token in the world because it's a proxy of that token. It's effectively pegged to the token. So even on MDB as an example, if I want to trade against someone with MDB, well, I don't have to pay the tax on that because it's the proxy of that token. It's kind of like the peg of that. So it's a really smart way in which you can open up a completely universal, ubiquitous token range, and you can trade against the outcome of a time-based element. So let's say I say, okay, well, within, I don't know, thanks Buff Tony, I like the music too. You can say, okay, well, maybe I think the price of Bitcoin is going to go to 24,800 in the next 7 days. And then someone on the opposite side of that will take that bet, let's just say, because they believe it won't. And there'll be a price that they would agree. And effectively that price range over that period of time will determine the outcome. If you hit that price, it goes into a smart contract and it's escrowed, so it's very safe. And the outcome of that will be paid at the end of that time. So it's a really smart way. But what's key to this is that you need to understand trading, okay? So a few facts. It's 100% trustless. It's a P2P exchange. Fantastic. So you're trading against other players. You're not trading against a central exchange. It's universal. Like I said before, any token at all can be traded. Just struck a fantastic partnership deal with Mr. Tyson Fury himself, the Gypsy King. Amazing work by the team. Just some stats. As I say, it's trustless, free to use the platform. You're trading head to head, like I say, and yeah, 200 trillion plus market, which is huge. Now we've got to give another round of applause from the team that brought you MDB, Danny and Alice, the amazing duo. Real fantastic team. Usually when you see these kind of when you can say and stand behind the team that brought you MDB, it's quite a good stance to have, and you guys know MDB quite well, will know that. Well, we expect big things, let's just say. What's the road to launch look like? So look, January, we launched the brand. In February, yours truly, with the rest of the team, are going to be in London, for which we are diamond sponsors. It's just going to be, coming up the end of this month. We also have gold sponsors in March for the Dubai exhibition, which Mr. Wim will be attending himself to that. Then we're going to Austin, Texas in April, followed by Istanbul with a gold sponsor there in May. followed by the affiliate program launch. And anyone who's in a team or got anyone who's interested in becoming an affiliate, just head over to this link here, foxify.trade. Link is also in the description. Hit the affiliate program. You will just, whether you're an influencer or you have a project, easily to get involved, and the team will review and get back to you with any response. And then in June, we launched the actual platform and this central exchange listing. So my task really, if I'm honest, is that I want to spend the time between now and June, at least once or twice a week, going through some trading ideas, trading skills, how to bring yourself from a complete zero. And that's not me trying to be funny in any way. It's just understanding the trade and how to trade, what platforms are used, how to kind of work your way around the platforms, what type of central exchange you might use if you're trading. Obviously outside of Foxify, you may use ByBit, you may use Kraken, Binance, Qcoin, any of these platforms. So it's kind of just guiding you through some of this stuff and making sure you guys are comfortable with some of these ideas. As I say, if you want to get yourself on the affiliate program, you've got the project. If you're a project, like a DeFi project here, or if you were an influencer, you can enter in this way as well. So get yourselves on that. But now we are going to move to TradingView. So look, what is TradingView? Firstly, the way I would classify TradingView is it's the tool for technical analysis. Yeah. So many traders will have different platforms that they use. So they'll have a platform for trade execution. That could be Binance, that could be Kraken, could be ByBit. Any of these kind of platforms where you execute your trades. They also have the ability to do some analysis. But for me, and for many others, the gold standard is absolutely TradingView, simply because it's, for me, unrivaled when it comes to a trading platform. There's obviously other platforms out there that give you much more in-depth order book data, like Bookmap or Trading Light and these kind of other platforms. But from a standard platform, just to get you in to start doing some basic technical analysis, it's going to be hard to look past TradingView. Now look, as a starter, when you first download TradingView, it's probably going to look like this, yeah? Which is horrible, let's be honest. So depending on how you like to look at your charts, I don't like to look at them in this kind of really brazen white. I like the kind of dark background. So first thing you're going to do is go into your top left hand corner, and then you're going to change it to dark mode, and that'll get you into, you know, looking like this. Now the other thing, you may or may not want to see these grid lines, so head over to the settings pane in this top right hand corner, and then just simply go to, let's see, appearance. You can decide whether you want the background to be solid. I do. I don't want it to be a gradient. And the vertical lines I want completely opaque. I like to be clean in my charting. And that's me good to go. Okay. So the way we're going to do this is we're going to go kind of from left to right and figure out what all of these kind of things are. So on the left hand side, this is kind of your drawing tool. So this is where you're going to overlay data on the chart, and they could be, you know, lines, arrows, could be anything, and we'll cover that in a bit more detail. So these are all where you're just essentially using your analytics to determine certain things on the chart. Across the top, you've got your ticker symbol. So whether you want BTC, ETH, or any other kind of token, you could put Tesla as an example if that's what you want to look at. Click on Tesla and that will bring Tesla's chart up. If you want to add and overlay a chart, so let's say for example I might want to overlay the DXY. There's reasons why I might want to overlay the DXY, usually because it's got an inverse correlation. I'm not going to talk about too much about why that's the case at this stage. That will certainly be for a later video, but just there may be a reason why I want to have this in. So I can decide whether I want that to be a percentage scale, a new price scale, or a new pane. Now I probably don't want it to overlay on the chart, but I want to have it as a new pane. Yeah. So when it comes in, you'll see there's a slight correlation. Yeah. Inversely proportionate to BTC. Now that's from an analytical perspective. Usually it's a leading indicator to tell you whether there's a risk on or a risk off appetite in the market. And if the DXY is doing one thing, sometimes that can mean BTC is doing the opposite. And DXY, incidentally, is like a basket of currencies. So majority of it's the euro, then there's the Japanese yen, followed by GBP and kind of some more obscure ones. But in terms of the DXY, that's usually inversely correlated. So you can just, like, even if you go like from this point here, crudely, I might add, you can kind of see that. I know we have this kind of belly flop dip here, but as the price usually goes down, you can see that price of BTC goes up. And there's other correlations as well. There's yields, the 2-year and the 10-year as well, which we can use in terms of inverse correlations. But I just wanted to give you the idea that you can add additional chart and functionality. You know, if you're a forex trader, you might want to look at different pairs. So you want to, you know, correlate or gold or something like that, like a precious metal. So having this ability to overlay this, and you can actually change how this looks. You might want this to be rather than a line chart, you might want it to be like a bar, or, you know, candles as an example. That doesn't look great on the chart, I've got to admit, but depending on how you want to view that data, you can have that as you want. So we're going to get rid of that. Then next, across the top, we have the time frames. Now this is important because execution of trades happen on different time frames. If you're a scalper, which means you like to get in and out of a trade, you may be trading on the 1, 3 minute, 5 minute time chart. But if you're maybe a day trader, you may be more interested in like the 15 minute or the hour, maybe up to like 4 hours. But if you're a swing trader where you're looking more for longer term, you may be trading on like the daily or the weekly or even the monthly in some instances. So the timing side of it's quite important, and it will tell you how many or how much data you can see in the visible range based upon, you know, the time frames. Like if I look at the 1 minute as an example, you can see, you know, that's every single one of these bars that I'm looking at is essentially 1 minute's worth of data. So if I zoom right into this here, and I can choose to zoom in just by using the wheel on my mouse, or I can slide this up and down in terms of the granularity, and I can slide the time across. So this is the price on the right hand side, and this is the time, and I can have this as an automated scale. So if I drag, it will always make and center the price. Yeah, so you can see as I'm moving that and dragging that across, I haven't got to move or change anything with the wheel. It simply just follows and centers the price as I move it. So that's a good function, the auto. But I don't tend to use the auto function, if I'm honest. I tend to just like to scale in and scale out of the price as I see it. So there's your time. I see your time across the top. Then you have, let me go back to the 15 minute. Then we have the actual candle type. Now I tend to gravitate towards either standard candles, or I'll look at the Heikenashis, and again I'll come onto them on a different video. But these are the different types. You can have hollow candles, or you can just have typical standard candles, which will just show you your open, your close, your high, and your low. Which is, you know, when a candle opens, when it closes, the high of the candle is the wick, and the low of the candle is the bottom of the wick. Yeah. And again, we'll cover things like candles and stuff in more sessions. This is just to get a sense on TradingView as a platform. Next, we cover indicators. Now, this is probably where you'll spend a lot of your time with different, specifically if you're new anyway, you'll spend a lot of time into these different types of indicators, because when you first start, you know, everything seems like the best thing since sliced bread until you realize it's not. But again, we'll cover what I think, well, what indicators I like to use, and I guess what indicators, yeah, as a new trader you tend to gravitate towards. And as a new trader, I would throw the rule book out, but usually it's RSI, then it's something like MACD, exponential moving averages. These are the kind of 3 indicators that give you a good sense on what the market's doing, and, you know, in terms of like overbought and oversold and stuff like that. But I think as you kind of develop as a trader, you start to realize that actually they're all lagging indicators, and they tell you that data, what's happened previously, rather than kind of forward looking. So I don't know, take that as you may, but for me, there's better ways to trade, and different ways to kind of look at this. And again, not for this session, but we will certainly be covering a lot of that as we move on. Indicator templates, you might have different templates. I don't typically use that. Then we have the alert section. So if you want to create an alert when a specific price passes a indicator value, could be a high or low, when something crosses something, you know, generate an alert. So if you want to place a trade or an order in, say, ByBit, you can get this alert coming through to your mobile phone. So you haven't got to sit around looking at the charts. It's just when you get when the price comes into a specific area of value that you're interested in, that's when you can get your alert. So that's a really powerful function. And then we have the replay tool. Replay tool is fantastic for back testing. So, you know, you can pick a time on a chart and then you can use it to kind of forward look. So let's say, you know, you may have said, okay, well, how did price perform? So at this stage, do I think price is going to go up, or do I think it's going to come down? And let's say you've randomly gone back in time, you know, where you don't really know what the price is going to do. Well, you can do some analysis, some technical analysis for yourself to see how close you are. So I might say, okay, well, you know, as an argument, I might say, well, I'm going to do a buy if it comes here. Well, as an example, I'm going to do a stop loss at, say, here, and my take profit will be here. So you could say, okay, that's my thesis. I haven't even looked at this. I'm just randomly kind of seeing where we go with this. So if we hit this point, that's where I'll enter the trade. It'll be a short, and I want the price to come down here. That'll be my take profit. This would be my exit point in terms of a stop loss. And then you can just hit play. It'll run at 10x speed. And let's see what happens. Oh, okay. So now we'll enter the short trade. Now do we take profit or do we stop? Yeah, stopped out. Stop would have been a bad trade. Don't take that. Don't take that as me trading. I was trying to illustrate that from the power of the replay mode. You can use that to essentially backtest ideas and concepts that you might have in order to kind of forward think and sharpen your skills as a technical analyst, let's just say. Okay, so then we have this tool here. So depending on the level of it's a free software actually, but if you pay for a different tier, the tiers mean that you can have more indicators on the chart. It also means that you can have multiple screens open. So I may want to have, like, you know, this two-phased approach, or I might want to have like a 4 as an example. I don't think my license goes to 4 or 3. No, see, so I don't have that license myself. I think I have the Pro license. I don't have the Pro Plus, but these are just additional features that allow you to open multiple windows. And again, that's powerful for multiple time frames. So you might want to have the 4 hour on one window, and you might want to have the 15 minute or the 1 hour on another window. So that's just a way to kind of identify different time frames on your chart. Then these are all different templates for the layouts. Now, my main template is one that I call Naked Trader. It's basically without too many indicators. I have a day trader and then I have a swing trader set up. So these are just different indicators and different kinds of setups that I have that I save as a layout. So I haven't got to keep on changing, you know, my templates each time, or not my templates, but my chart each time. So it's just a good idea to get into. We have a search function, useful if you're trying to find something. Then we have the chart settings. We went into that before. Full screen mode gets rid of the top bar, and then if you want to take a snapshot at any point, you can take a snapshot, copy chart image, tweet it, do whatever you want. That can go on. Then we come down to this right hand pane. Now I spend the majority of my time in the object tree, and again, this is a really, really, really powerful tool, and this is the point of why I wanted to kind of go over this session, because there's entry level mode in terms of how people chart, and then there's, you know, apex mode. Maybe not apex mode, but the mode in which I think everyone should be able to chart to be, you know, proficient with charting. We'll cover that in a second. And then this is where we build our watch list. So right now I have crypto, so these are all my kind of go-to cryptos, and you'll notice I have 3 BTCs. I have BTC from ByBit, I have BTC from Binance, and I have BTC. These are all perpetual USDT, which is futures. but I also have Coinbase as well. And the reason I have these three is because there's a slight difference between the markets. So, you know, the price on ByBit might be slightly different from Coinbase, and therefore might be slightly different from, say, I don't know, Binance or Kraken or whatever. And the reason that's important is because sometimes, let's say you've got an idea where you think price is going to go to a certain place. Well, it might hit it on your platform, which for me is ByBit, but it might not hit it on Binance. So there's a good chance it'll come back to that zone, because the mark price, which is the kind of the average of all the exchanges, actually hasn't quite hit where it needs to be. So I like to kind of sense check multiple. The same price, the same token on multiple exchanges, but I have all my cryptos in one, and the way to do it is to just simply, you know, if you see these three dots in the corner, I just go to add a section, and then I'll when you create that, it gives you this kind of top link here, and you can just add crypto. I have my indices here, so I have my Nasdaq and my S&P 500. I then have my currencies, so the DXY, which, like I said at the start, was the basket of currencies. You have GBP, US, Euro USD, and JPY, because I like to look at the correlations. We then have the 2 and the 10-year yields. We have the volatility index, and I have gold. And if I want to add more, even maybe commodities, but I don't really get too much into commodities. So, by the way, if anyone wants me to share this list with them, I can share this. If you've got TradingView and you don't want to have to find all of these, I can share this list by copying it and just dropping it in. So let me know if you want me to do that, so you haven't got to faff about. Awesome. Well, let's dive in then. So, right, here's how you kind of navigate. Right, so let's assume I've got some ideas, okay, and those ideas might be, okay, well, I'm going to start with just creating some major support areas, right? And the way I do this, and this is where templates come in a lot. You'll see that I have this bar here. Now, this is my favorite bar, okay, but they're all derived. All of these things here are derived from here. So you'll see, for example, when I hit this little cursor here, it's got this little arrow, and you can see there's multiple elements, and you'll see this little star to the right hand side. That's to just add a favorite to your chart. Now, on some of them you'll see I've already favorited, because these are kind of my go-to. They're the ones that I tend to gravitate towards, you know, more than anything else. So rather than you having to keep going in, everything's about speed with this. You want to be efficient and a good charter, and if you have to keep on faffing around thinking, oh god, where's the Fibonacci retracement tool, or where's, you know, Elliott waves, or where's me whatever, you know, fill in the blank, you don't want to have to keep searching through all of these. So each time you come across something that you often use, just hit it into your favorites bar. The way you bring your favorites on and off is to just simply hit this button here. So when it's on, your favorites are there. When they're off, your favorites are not. So like I say, let's say I want to just add in some key supports, right? So I might say, okay, well, right now I want to look at maybe here as a major support. Yeah, so just clearing the liquidity where the top of this peak would be, and then I would say, okay, well, the bottom is maybe here, would be, you know, just as an idea, you know, a support near the bottom, right? So let's say you've got your major support in there now. Now I might want to say, okay, well, at some point this chart's probably going to get a little bit messy, because I'll probably overlay a lot of ideas on the same chart. So what I want to do now is just open up my object tree in this bottom right hand side, and then I want to just right click on the first one, and I'm just going to create a group, and I'm going to call this, yeah, major zones. I could call it support and resistance, you know, it's entirely up to how you want to call it. And I'm going to drag this one in here. Now what's really good about this now is I can lock this, which means I can't move. If I unlock it, I can move that around, but if I leave it locked, it stays on the chart, which is a good thing to do if you've got stuff that you don't want to move. And then I can decide to eyeball that or not. So if I want it on, I have it on. If I want it off, I have it off. So this is just one idea, right? So maybe another idea as this is developing is you say, okay, well, let's go through this toolbar here, and we'll kind of add these on as we're going. So the first one I always like to have is my draw tool. So specifically, if I'm wanting to kind of mark points on charts as an example, and just identify little things, and, you know, just scribble and whatever I want, this is your draw tool. It allows you to just make markings on the charts and do whatever you want. Really good tool just for kind of quickly demonstrating different items. Next in line, we have the trend tool. So, you know, I can maybe say that this could be a trend. Again, maybe I could say that that could be a trend, and there's my line. So I've got the ability to just draw nice straight lines. Again, these are just all functional draw tools. I then have my horizontal line, which I can just, you know, maybe just use that, which will draw a complete line right from left to right and across the entire area. I can move that around. Wherever I put it though, it's always going to be from left to right, the full entire length. Next in line, we have the horizontal ray. This is one of my favorite tools because in line with this magnet here, so if you see on this left hand side, if I click the magnet, it will, you can see the way that dotted line is really kind of aggressively linking to stuff. I can just hit that there and that will create a horizontal ray. So it'll take, you know, whether it's a high or an open or a close, it will take that point on the chart where I want to add that on it. It'll just fix it to that point. And there's reasons why that's useful, and we'll go over in a short while. Then I have an arrow tool, so I might want to just, you know, add an arrow to, oh, don't know why that went there. Let me just delete that. I might want to have an arrow that goes like that, and that will point an arrow if I want to just make reference to something. And then we have the parallel channel. This is quite a well used function. So let's say I think there's a nice channel starting up here, right? I can drag that down and that will create, you know, a channel. Like let me give you a better example of that actually. So let's say right now I think that this is a channel, right? I can go try to eyeball that would be a channel. Okay, the idea being that, well, for this to be a channel, I'm looking for multiple touch points. So, you know, do we have multiple touch points, these zones here? So let's just zoom in a little bit here, and you can say, okay, well, and this is just, there's reasons why, again, these are all very market maker instituted, but still, from me, you know, we want to look at areas which start to gather patterns to the human eye, because we are all humans and we do like patterns, right? So these are the kind of things as a chartist, as a TA analyst, that you're going to look for in order to be able to identify, you know, different things on a chart, different patterns at play. And you can clearly see here, this has the hallmarks of a potential channel. So then you could say, okay, well, maybe I'm going to see how price reacts to this area here, and that might be, you know, an area, it's in line with a major support that I've just drawn. As you know, we've just drawn a nice major support there, and it's also in line with the parallel channel. Actually, this might be a good area to put a short. I'll put me, you know, a short entry here, because you expect that this is going to be a major zone of resistance, and therefore it's a downward. And you've got two lines of confluence now, haven't you? You've got a parallel channel, and you've also got a, you know, a major resistance line. So that's two ideas in one. So now, not to convolute our ideas, what we want to do is make sure that we're not, you know, we've got the ability, again, we want to lock it, and now we want to be able to switch these off. So again, if we want to look at the chart in an unbiased way without being convoluted with ideas, you can just use this function within the object tree. Now, next we might want to add on, let's see what else we've got. Yeah, we've just done the squares. We might want to say, okay, well, let's look at a Fibonacci retracement. So I might want to say, well, let's look at where a potential retracement might go. So this was my previous high, and don't worry if this looks like what the hell is that? We're going to cover all this technically in a lot more detailed sessions, but this is just about managing TradingView right now, right? So, you know, this is the start of where you want to expect maybe your retracement tool to go, and you can see here, you know, we nicely stay around this 382. Of course, when we come, where do we come back to? 382, and now we're coming again. Usually what you tend to see is that we come down to the 0.5 or even what we call the golden pocket, which is this zone here. But again, if we start adding these multiple ideas on, already the chart starts to look a little bit messy. And if you're not confident or you're not conversant with just the basics of it, already you're going to get a little bit confused. So this is why it's always important to have the ability to just turn your ideas off when they're not in use. So you want to just, you know, bring in, oh, am I still within my parallel channel, or as my major zone being breached? You know, these kind of ideas keep you nice and sharp with your TA. What else do we want to look at? So then, yeah, maybe as an example, so then you've got something called a Fibonacci retracement. So this is looking at like, you know, a swing low to a swing high, back down to a swing low. And again, I'm going to cover these in a lot more detail, but the ability to kind of look at where an extension of an area might go. And it's interesting that, you know, we've got a couple of nice highs that are peaking right at this kind of 2.786. You got one here, and obviously we've got one here which is struggling at this zone right now. But again, it's another thing that we'll remove off the chart. And then what we've got next is we've got the Fibonacci time-based extension. I'm not going to cover that one right now. It's a little bit too technical, if I'm completely honest, at this stage. Then we want to look at kind of how we can implement long and short positions to figure out what our risk to reward ratio is. So let's say, as I said before, you know, what we're looking at is a major zone. We liked the parallel channel, and we're going to put a short entry in, right? So this will give you an idea by saying, okay, well, what do I want to risk? So let's say that's going to be my short. You might want like a 3-to-1 risk to reward ratio, right? So you could say, well, what would that look like? So you could, you know, be relatively tight with your stop loss to get your, you know, that's 2.96 risk to reward ratio. So whatever you put on that in terms of your risk, you get a 3-to-1 reward back on that. So again, this is just ways to identify your trading plan you're going to go with. You can also do the long as well. So that's this one, which would be the opposite. So you'd be looking for, you know, maybe you're looking at the bottom of the channel for a range, and again looking for a 3-to-1 risk to reward ratio, something like that. That's your long position. Next, we have a price. I use this a lot just to figure out how far prices move. So this will tell me like that's a 39% move, or, you know, 6,817 basis point move from the bottom of the channel to the top of the channel, as an example. It's just a way to, you know, give you a numbers game. So you want to figure out what the move's been like. That's a 7,000 basis point move, or 40%. What we have next is a date range. So how many bars or how many dates. So in this case, we are on the 4-hour lead chart, and that's 222 4-hour plots on the chart. So again, similarly to the price, also have a time. What's next? We also have this is a fantastic tool. This is what we call the fixed volume profile. So let's say between this candle and this candle, right? So we've been in this range, right? This is a bit of a range here, right? I don't want to go into too much techie bit here, but let's say this range here, since this candle, that's the range. Now I want to know, where's the most volume across this entire range being traded, because I want to know what the height of that is, the lower that is, and ultimately where the point of control. These are good concepts to understand that. It's where the most amount of volume has been traded in these areas, and there's a psychological element to it. So you have what's called the value area high, the value area low, and then you have the point of control. So I'm just selecting this tool here. It's called a fixed range volume profile. I'm going to select that tool, and I'm going to go to this tool here. Now what this shows me is across this entire range here, which is back to January, 20th of January, up to today's date, you can see the point of control. So the most volume is traded, and it's depicted by this little peak here, is 22,900, right? Pretty much on the dot. And then it takes the 70% range of that total period that you've looked at. It looks at the bottom, which is called the value area low, which is 22,465, and it takes the value area high, which is 23,600 and 22,600. Now the really key thing about these is the psychological areas. Like you can see here, look at the bounces. You can see each time, you know, we kind of wicked down, but respected it. Here we just missed the wick of the value area low, and then just here again, just wicking down until such time that we absolutely thrash through it, right? Then, you know, look at the point of control. You can just see how much we lollygag around this area here, just because it's the point which there's a lot of liquidity. It's, you know, market makers like to be able to trade in these kind of high liquid zones, because less risk on slippage and price impact and these kind of ideas, which we'll explore in later sessions. But this is it's a good way if you're thinking about technical analysis. You want to know where are the ranges, where are the areas of value, where's the likelihood that we're going to get some sort of a reaction or a response, and so these kind of tools are all geared towards helping you navigate, let's say, these waters. So this is called a fixed volume profile, and I really like that one. That gets added to the favorites. What do we have next? We have head and shoulders pattern. I mean, you can kind of sense a head and shoulders pattern. Head, I mean, and then this is the neckline here, what they call the neckline. So yeah, that's not a head and shoulders pattern, by the way. It's a tool that allows you to kind of draw a head and shoulders pattern. I don't really use that an awful lot, to be honest. Then we have forecasting tools. Again, I don't really use that at all, but you can look at things like when was the last crash in, say, 2008, take a load of data and then overlay it to forward predict where the price might go if it was to replicate that 2008 crash, let's just say. Then you just have some basic draw tools. So this just allows you to dot to dot on the chart and just follow wherever you click your mouse. It'll just stick to that kind of thing. Just nice to kind of give you some ideas on drawing tools. Then what else do we have? We have these are just some more deeper technical analysis. I'll start with an Elliott wave. Just to give you an idea, you have like 5 waves as an example. So you could say, okay, well, this might not be the best example, but I'm just going to wing it. So you could say, okay, well, if this would be, your 0, that might be, I don't know, Elliott wave 1, come down, small Elliott wave 2. This might be 3, 4, 5. So kind of 5 waves, right? And again, not for discussion, not for debate on this specific session, but we're going to cover Elliott waves and corrections in a later video. But you have a 5-wave Elliott wave, and then you could have like an ABC correction. This case could be a flat ABC correction, let's just say, or a zigzag pattern, depending on how you want to do it. Specifically not correct, but again, an ABC correction is like a 3-point move before maybe another Elliott wave. This is more about just having access to the tools rather than specifically looking at what they are. And then I like to have this kind of harmonic pattern, because sometimes you can see these patterns that form like this, for example, is a crab harmonic. So you can, looks a bit crazy when you do it like this, but like as an example, this number here, I'm looking for 1.618, right, as an example. So when I get to 1.618, close enough, that is a crab harmonic. So it's a pattern that is ultimately bearish, and funnily enough ends right on where our major support zone resides. Okay, so just as an example, this is a super bearish pattern, by the way, and I might think, okay, well, that's another idea and another level of confluence. So think about the confluence now. So we've got a top of a parallel channel, we've got a strong resistance line, and it's building ideas and cases towards these things. But again, you don't want the chart to get too messy. So what we're going to do is just take these off, and this is just all about being able to manage the patterns without getting too crazy. Just a few more to cover. So these are just arrow tools. So you might just want to point at a specific area on a chart that you want to draw attention to. Next we have some text. So again, you can just put you could just put some text on the page. You're too kind. You are absolutely too kind. And that's there. Okay, and then what have we got next? This is just some notes. I can add a little note here just to remind me of a loss that I made or something stupid like that. I don't know. It's there if I need it. And then again, just some call out text, and then some more commentary tools. So these are my go-to. These are what I gravitate towards to more often than not. There might be the odd one or two that I'll maybe pull from here, but in the main, these are how I chart. Yeah, so don't worry if you've not learned too much on this one. This, as I say, for me, this is just about entry level. It's just about understanding and familiarizing yourself with you know, TradingView as a chart. Other than that, you know, there's not much more I use it for. I do all my technical analysis in this. I also use Bookmap. Again, we can cover that on a later video. I also use Trading Light. We can cover that on a later video as well. Now, just double checking. So we've got any questions? Not really. Sorry I'm late, but what if there is no one willing to take a bet? Well, I mean, that's obviously he's referencing Foxify, but I think at the start it's always going to be slow until adoption. Once mass adoption comes, it's like anything, isn't it? You're gonna get someone. It's like the exchange. It's like Betfair as an example. You're always going to find someone who wants to take that bet. But you're right. You know, it's about liquidity at the end of the day. Someone has to take a bet on the other side, you know, for that bet to happen. So it's just about growth and you know, getting the message out there. Which exchange can take orders from trading? That's a really good question. Actually, you can, because I would love I wish that TradingView would take orders directly into ByBit. We can set and generate alerts via ByBit, from TradingView, which will come through to ByBit and allow you to kind of, you know, link an API. I don't know if physically actually makes the trade, but it will give you an indication, and ByBit will generate an alert to say, you know, this such and such has been triggered, and you can then decide to take, you know, a call. But in here, I think it's going to the trading panel. So if you look here, these are all the current exchanges. You've got Pepperstone, that's paper trading. So you can actually, if you connect here, you can trade directly on TradingView, and that gives you the ability to, you know, trade and make the trades via that trading panel, which we'll have a look in a sec. You've got OKX, Capital.com. I think OKX is a crypto-based trading platform exchange, so that might give you the ability to trade through that. You've also got Capital.com, TradeStation, Active Trades, FX Open, Oanda. Again, I've heard the name, but I'm not familiar enough to know if that's actually a crypto-based one. I would say Bitstamp certainly is a crypto-based trading platform, but they are adding these brokers on all the time. So I'm just hoping that, you know, something like ByBit, you know, comes on, because I would like to be able to use, you know, the full extent of this platform. I think that's pretty much covers this session. We're going to get an awful lot deeper with a lot of this stuff. I mean, right now this is just functionality, you know, how to navigate your platform, how to get yourself set up in the right way, how to use the methodology of trading in this way. Sorry, not trading, but technical analysis. Understanding how to navigate the platform is key. I'd probably just suggest you have a go and get yourself set up. Mess around with some of these tools, maybe even, like I say, open up that a paper trading account and just connect it on and start having a little mess around and a play. We are going to dive a lot deeper into things like we're going to go quite basic to start, but develop that. And I think the next one we're going to cover volume zones, because they're hugely important to know where price gets sticky, I like to call it. But where does price tend to gravitate, and why does it go to these specific areas, and how do we map them out on a chart that allows us to make a thesis, let's just say, that the price may go into these areas. And that's fundamental to understanding where price is likely to go. It's almost like a magnet, because without going into detail, you know, market makers it's food for them. Liquidity is food for the market, right? So it's like wherever there's most liquidity is where price generally goes more often than not. So our job as traders is to figure out where those pockets of liquidity lie. So the next session is going to essentially be, where do we find these pockets of liquidity? So probably going to do these at least once a week. Next one will be same time, same place next week. Hopefully you guys have enjoyed this. Really appreciate you guys coming on and dropping a few comments and stuff like that. Like, share, all that kind of nonsense, or don't. Really, I don't care. Actually, I shouldn't have said that. I just want this to be about educating the family. So with that being said, guys, I'll leave this one there. Peace, love to you.